In this video, we're going to talk about Ideanomics again. Yep, back to back. In my previous video, I mentioned some of my observations regarding this company and received a few criticisms. I then looked at the company under different perspectives and have since then evolved on some of my views that I felt the need to make a new video about Ideanomics. Ideanomics currently has a few acquisitions that are in EV, renewable energy, and fintech. Now, of course, the emphasis at the moment is on EV and renewable energy. Those companies are recently acquired over the period of 2019 to present day, and they are the main reason why many investors are hyped up about the company to begin with. When we look at the financial results of 2020 compared to 2019, the revenue has increased drastically. The reason why it's so appealing to investors, in my opinion, is because the trajectory looks very promising, and in the grand scheme of things, the operating losses in 2020 look like they can be managed in the upcoming year. I would add that another reason why the company is so interesting, which I also mentioned in my previous video, is because the company knows how to jump on the gravy trains in the market when they are present. For example, it caught the streaming trend a few years ago, the fintech trend, and since 2018, the EV trend. There are a few elements from the comments from my last video that I'd like to address in particular because they are important for us as investors. The first one is that the company's future looks nothing like its past. This is something that I cannot physically argue against because, of course, Ideanomics of 2021 looks very different compared to the company before the EV switch. There have been some major changes in the company's personnel, and this is normal because of the strategic shift taken by Ideanomics. But see, the thing is, when we don't have a pair of crystals to tell us what the future is going to be like, the past is sometimes the only element that can give us some hints. Looking back, I must admit I relied too much on the past to evaluate the future. But it doesn't remove the fact that the company thus far hasn't relied on making operation profit to boost its stock price. It relied on selling ideas. The business plan of Ideanomics since its inception to this present day has been selling ideas. In other words, that's the only thing that has worked so far. We don't know if selling EV motorcycles is necessarily going to work. We're going to see about this in the upcoming financial results. Ideanomics is going to release its Q1 2021 results in about a month. It's going to be crucial to see whether they can keep up with the expectations and to see if there is any progress in terms of revenue. About the conference, I'll say this though. Be careful about senior management's attempts to spin their way out of things, especially when they begin to talk about the future prospects and the potentials the company has. Those segments are usually the honey traps to get our attention away from the possible failings of financial results, like revenue growth or cost control. In other words, the boring stuff, the stuff that will make us sleep, but that are actually critical for the financial well-being of the company and ultimately the stock price. I've seen this happening in some other companies where the conference calls will go on and on and on about how big an achievement they have gotten so far and how much more potential there still is. The thing is, they missed on the point about revenue or profit. The reaction to this conference call ended up being catastrophic and the stock began to tank. This is not something that may just happen to Ideanomics, but something that can happen with virtually all the listed companies when times are rough, and times are kind of tough at the moment. Of course, if the results are good, then I would praise the company for its new direction that it took and would put certainly more faith in the long-term outlooks of the company. Another point that viewers raised in my previous video is the fact that Alf Poor, the CEO of Ideanomics, is a great guy. And yeah, he is. But the thing is, does it matter that much? For us, the CEO looks like the admiral of the ship who mans the ship, fights with the ship, and sometimes sinks with the ship. In reality, the admiral probably sometimes just gets tossed overboard. Like, the CEO is much more an employee, like any other, as far as shareholders are concerned. He may be a great CEO and a great guy with a great work ethic, just like he said on his LinkedIn profile. But ultimately, he is hired to execute the strategic shift that Ideanomics took in 2018 to pivot from fintech to renewable energy. If the company decides to take another direction, which it might be, and we're going to talk about that in a second. So, if the company decides to take another direction, what guarantees that Alf will remain the CEO of the company? So again, should he even be one of the considerations when analyzing if we should invest our money in that firm? I mean, yes, we should, but in a moderate proportion. Alright, so do I feel that Ideanomics may begin to switch to the next big idea? Okay, so before I begin, this is a very good moment to remind everyone that this is purely my opinion, based on some of my observations of the overall market, not about Ideanomics, the overall market, the surrounding conditions and circumstances. This is my opinion mainly because it's probably in their mind that EV is not as hot as it was back in 2020. This is my opinion mainly because it's probably in their mind that EV is not as hot as it was back in 2020. There are increasing signs that the market begins to shy away from EV market at large, regardless whether the company is good or not. I must have seen at least 10 videos about NIO breaking new delivery records on my newsfeed. That, so far, didn't stop the stock price from being sloppy since its peak. Hyliion is one of the few SPAC legends of 2020 that did not have a scandal coming with it. That didn't stop its stock price to continue the downward trend. Recently, ARK just sold their stake in an EV SPAC, even when the share price is below 10. Why would that be the case? Because in my opinion, ARK is worried that the stock may go below 10 after the merger is confirmed. Of course, when we talk about investing, the scope should be measured in years, not in days or months. But that is a good moment to pick up a mirror and be really honest with ourselves. Are you willing to put significant portions of your own money in stocks to be left in a position of holding the bag, hoping that at some point we're going to be able to see something blossoming from it? Are you willing to stomach the fear for potentially 5 to 10 years before seeing things coming through? And that is if they come through. Depending on your answer of that question, you can determine if and how much you should put in Ideanomics and when you should be selling it. So, what is the conclusion here? My opinion about Ideanomics is that it's a company that demonstrated its capacity to catch the trend in the market. The current fundamentals are promising, but I do have my skepticisms on if the company will keep operating as an EV-focused company for that long. Or, put it in another way, I do have my skepticism in the fact that Ideanomics will necessarily wait for years before seeing that the motorcycles that it's selling will becoming the main cash cow. Regardless of your opinion of Ideanomics, the company has shown capacity to create hypes over the years, which is great for traders. Thank you for watching, And I want to thank in particular those who left comments in my previous video. Let's keep the conversation going and let me know in the comment section down below, what do you think about Ideanomics and what do you think about my points that I just shared in this video?